In today's video, I'm going to teach you how to categorize your inventory purchases under the cost of goods sold account and utilize inventory tracking features to maintain accuracy. Handling your inventory efficiently is crucial for keeping your business operations smooth and your financials precise. Whether you're running a small business or managing a larger operation, understanding this process plays a vital role in determining profitability and operational success. Let's begin by discussing how to categorize inventory purchases under the cost of goods sold account. When you purchase inventory for your business, it is essential to recognize that these items are not immediately recorded as expenses. Instead, they become part of your assets and essentially your cost of goods sold or COGS once they're sold. To categorize these purchases accurately, start by ensuring that each purchase is recorded correctly in your accounting software. This entry typically involves two main accounts, your inventory account and your accounts payable or cash account, depending on how you pay for the goods. For example, when you purchase items to stock your shelves, you'll want to debit your inventory account, increasing its balance, and credit your accounts payable if purchased on account or credit your cash account if paid immediately. As you sell these products, only then should you record the cost in the COGS account. This process not only keeps your financial statements in good order, but also delivers a clear picture of your gross profit margins. Now, let's dive into leveraging inventory tracking features for better accuracy. Using inventory tracking systems is paramount in managing stock levels effectively, preventing overstocking or stockouts. Modern accounting software often provides integrated inventory management features that help keep tabs on stock numbers in real time. The advantage here is twofold. First, it ensures you always know your current inventory levels, and second, it facilitates a seamless connection between your inventory management and accounting processes. When setting up your inventory tracking system, begin by entering all relevant product details such as SKU numbers, quantities, purchase prices, and sales prices. Such detailed information empowers your system to track each item's life cycle from purchase through sale. Additionally, implementing a periodic review of inventory can alert you to discrepancies that might occur due to losses, theft, or simple human error. This further supports your aim for precise COGS calculations and financial statements accuracy. Integrating these steps into your business regimen can greatly enhance the visibility of your financial health and operational efficiency. By correctly categorizing inventory purchases under the cost of goods sold and employing inventory tracking tools, you'll be equipped with robust financial insights that ensure your business is running smoothly and profitably. Thank you for watching, and remember, a meticulous and tech-savvy approach to inventory management can make all the difference in your business outcomes. Stay tuned for more insights, and don't forget to subscribe for more tips on keeping your business finances in top shape.